Hey, it's Sammy. On Thursday, June 12th, we took 8 trades in Dow futures today for 228 points. Let's take a look and see how everything played out. That big purple pin right over there to the left, that's PPI. That was red news at 8:30. You can see the market was kind of consolidated right before that, coming off of volume point of control. We've got data, plenty of data, to enter this trade to the long side. Now you see we got momentum, sentiment, and a volatility. You can see this move starts going faster and faster as we start growing in our data, and we pop up here. We're going to take out these pins to the left, and we're going to go ahead and trail our stop right up here to a plus 33. All right, this was actually supposed to be one giant trade. It went all the way down to our actual take profit. However, we're trading the open. We're really aggressive with protecting our trades. This actually turned into 2 trades, but we had that flip in our short time frame data, and we're going short here. You can see that first take profit hit, or it was actually our stop loss. We were trailing right at this pink line, which is VWAP. We quickly re-enter the trade to make it the rest of the way down. We're running our trail at plus 32. So both of these trades all in off the open were worth 73 total points. You can see we bounce off of deviation. That's that red line down there off that open. That was that entire move. And now what we're doing is we're breaking this trend, or this wedge right here, going long. Our data's flipping over from short to long. You see, this data gives us confirmation. We're actually able to read our way in and out of trades. That confirmation is why we can take consistent wins. Now we're exiting here for 27 points. That's because we are hitting the open price. What would a trading day be without a break even? The key to this entire enterprise is protecting yourself from loss so you can look for the next opportunity and not have to dig yourself out of a hole. That's why we trail our entries to a break even as quick as possible. And then when we get a break even, like we do in this case, it's onward and we look for the next opportunity. That next opportunity was literally about a minute later. We just came down. We probably could have left our stop loss on and not took a break even. That's okay. We are back in the trade. It's cruising right up here. What we're trying to do is aim for this deviation level. That's why we have our take profit up there. So as we're struggling right here, we're going to go ahead and lock in 32 points. Now this is a few minutes later. Look, this trade actually did run all the way up to this blue line. It would have hit our take profit. No big deal. We are actually going to re-enter this trade because this trade is not done running long yet. Now getting in this trade, I have my stop loss set at -9, and that's right where those pins were in that consolidation, that little couple of minutes right there. Remember, I am reading data. Actual numeric value for momentum, sentiment, and volatility is why these trades are moving so quick. You can see we're going to take 30 points on this trade. What goes up must come down. We have our data starting to decay and flip on our short time frames. This is our signature soda reversal process. When we are overnight high, we are high of day. We're at the 38.2 Fibonacci. We can't go anymore. We take the reversal. We're going to lock in right here, right around this 200 moving average for 33 points and be done for the day.